Good morning, traders. It is Friday, August 23rd. Taking a look at the charts, we've got the SP 500 daily chart here. And what we're looking at is the market's been testing these recent highs from a couple of weeks ago. And we're testing this 20-day moving average coming down. And we've got our cycles coming into a top. We've been talking about this being a market top here in mid-August. We're looking for a continuation move. The trend is still down with our trend analysis going forward with red bars indicating momentum. Everything is still to the downside. And today we're starting to see equities give way to the downside. Now, yesterday we showed you in the morning. Let me just go to the 10-minute chart and let's just zoom out a little bit. And if we look here, yesterday the market had a sharp sell-off in the morning, ended up going into this bear flag throughout the rest of the session, and it ended up selling off a little bit into the close. So it sold off. We had this bearish formation, and then it sold down again into the closing bell. I talked about, sent a chart out very similar to this, where we have the initial sell-off. We've got kind of a lower volume, kind of rally back up, and then a sell-off. This one sold off much deeper into the close. But yesterday the market closed here. In overnight trading, it worked its way up. Again, you could argue we got maybe a triple top here, maybe a quadruple top, whatever you want to call it. Either way, we're getting back up into this area. And then this morning we've seen a big drop in price. We're back down to this significant, we tested yesterday's low. Fibonacci is usually looking for a nominal new high or nominal new low, and it did find a new low this morning. Huge volume. Obviously, news has hit the wires. This type of volume in pre-market is almost the same as regular trading hours. So we got some big news hitting the market today, and this could be the start of that big drop that we're looking for. So if we go back to the daily chart, you can get an idea of where we are in the grand scheme of things. If we were to just highlight the type of price action we are in this type of price action, this type of price action, this type here. We're in this consolidation phase. The big question is, do we resolve to the upside or to the downside? Now, based on all of our analysis and more or less this, what looks to be a major topping formation, big volatility, huge waves of distribution, we are anticipating eventually a breakdown and go back and potentially roll all the way over, break the December lows, and really go into a full out bear market going forward. But we don't want to jump the gun. We got to just play the shorter term trends. As long as we play the shorter term trends, we'll always be on side with the new bear market or the new bull market, whatever comes after this mega consolidation. This is either a consolidation for some crazy hyper extended bull market, or it is a major topping formation for a huge market collapse way below the levels down over here. So that's kind of where we stand now. Let's take a look at our analysis, our short-term analysis chart. We had more or less the market in an uptrend several weeks ago. We ended up getting short. We played this downward move and got out somewhere down over here. The market's chopped around, continues to go. If we look at the short-term analysis, you can see we are back down to what could be we're coming into another major bottoming formation. Obviously, this is a really critical level, line in the sand. Right now, the market is trading at 2,900 more or less, which is right over here. We are testing. We've got this big gap window right here. We are coming down. We are now kind of filling this gap window. We're very close. We had a low here yesterday. We're back down to this level. If we break this level, then we are going down, going to start to sell off, and we could come all the way back down to this yellow line at the bottom. And if this yellow line is broken, then we've got a very significant decline underway. Now we are short the market, and we did get short more or less at a point here. We wanted to make sure we are in case the market broke down. So we are short down from this area. We've been holding and letting the market do its thing. We can see our cycles here topping, and our pink forecasted cycle shows we should see the market start to sell off. Now today, if we were to just zoom in a little bit more today, we look at the price action. Today the market is going to gap lower. It is trading at 29. It is going to gap right down here, which we got a green, more or less short-term cycle bottom. And we know what happens with gaps. Gaps, if the market opens here and the market closed there, we are going to have some type of probably a gap fill, which means we could easily see the market rally back up, because this is going to act as support. This is a previous pivot low. We could very easily see this cycle move up, fill half or most of this gap, or maybe all of this gap, but then eventually start to sell back down and eventually break down next week, and we see a big drop in the market going forward. So that's what we're looking for. This is what we're positioned for. The market always has a way of dragging out and taking much longer to do what you expect, but you can clearly see. Let me just zoom out in this cycle a little bit here. More or less, you can see how there's multiple little cycles. All these dips and blips in the chart. There's multiple little cycles within the larger cycle. We get into these larger cycles which go like this, and they go like this. You get these cycle lows, and that's what we're looking for. We are in a downtrend. Red bars meaning we want to be looking more or less to short when the market is making these cycle highs. We jumped the gun trying to chase it, not so much chasing it, to make sure we were in place in case the market collapsed, because the market falls about 7 times faster than it rises, meaning in one day it can wipe out about 7 days worth of gains, and we don't want to catch the next leg down. We want to make sure we catch the next leg down. So now we're looking for this next leg to come down. It'll get back to where we're more or less short, and hopefully we'll see this continue to break down and go much lower going forward. Now let's take a look over at the rest of the markets real quick. The dollar is trading higher this morning, and it's not having much influence on gold. Gold continues to rally. It's had this rally. It's consolidating. It's very close to having a breakdown, but at this point, if the equities markets are starting to collapse, we're going to see gold really hold up and start to extend. And gold did dip down into a short-term oversold territory the other day, more or less right down at these lows here. So it is having a nice consolidation. If stocks start to collapse, we're going to start another leg up. And if we just stretch up this 10-minute chart down below, you can see the news this morning sent gold popping really quickly from 505 up to 513, up near yesterday's highs. I mean, on the 10-minute chart, it looks like a huge move, but it's just a relatively small move, but it's right up at resistance. And if we were to squish the chart together here, you can get a little more idea of where we are in terms of resistance. We've got these more or less these highs extending across. We're starting to break these. We've got this high here, which the market made a nominal new little high. So this is an early warning sign that the market could be starting to pile in. And we actually have some really big volume moving into gold this morning, just like huge volume moving in the stock market as well. So there's obviously some pretty big news. And again, news-based moves typically fizzle out. So we'll have to see where things go today. We could very easily see half of this move fizzle out today or over the next couple of days before it does much more. But it is starting. It's broken this fallen trend line. That's the early stages. It's testing this upper next pivot high in the market. So if it consolidates and builds a launch pad here, we could very easily see this pop and break out and start another run going up. Looking over at silver, up 0.3% this morning, same as gold. Again, trading in these upper areas. If we were to look over at miners, miners popping this morning. Obviously, it's broken this fallen trend line, trading kind of just above it. But again, we're seeing money really move into the safe havens this morning going forward here. Now, let's take a look over at energies. Energies are down pretty sharp this morning. I'm just going to go back to the daily chart. Here is the daily chart of natural gas. Obviously, we are still in a downtrend. The market came up, struggled to break out, tried to build a little launch pad, never really broke this previous pivot high or this more significant pivot high. Instead, it's rolling over. We are looking for it to get down to that $2 or sub $2 level below, and we'll be looking for some type of major bottoming formation. But at this point, not too interested in natural gas right yet. Crude really taking it on the chin this morning, down 3%. It's rallied up to this resistance trend line that we drew on the chart here. I haven't drawn it on this chart, but if we were to just draw across these tops here, you can see we've got this falling trend line in the market. It came up, pierced it, is reversed back down, really picking up speed now. It broke this previous pivot low. It is on its way to go back down to test this 51. And we talked about this before, that if it breaks 51, closes below there, 44 is the next downside move. So now that this is starting to roll over, we may get some type of consolidation here, or we might get some type of bearish consolidation somewhere down here, and we may end up taking an inverse oil play for a leg to the downside. Last but not least, let's take a quick look at the chart of bonds. Bonds have been on a slow move higher. They've had some pretty good gains this year. Overall, we had that really strong run, lots of money piling into bonds. And this morning, we've seen bonds really sell off and move down to the 163 area. And it's starting to reverse really nicely this morning with some big money. This could have been a washout low. This could be a pivot in the major markets here where stocks are putting in a major top. These safe havens are putting in a significant low. And if we take a look at our 30-minute analysis chart, let's just zoom into the 30-minute. We've gone from a downtrend to an uptrend, a neutral to uptrend, and we've been moving higher. And if we take a look at the price action here of bonds going forward, you can see yesterday we did dip into some short-term oversold momentum levels, and the market dipped all the way down to this 163 this morning, and it is clawing its way back up. So this could be a washout low. We do have a cycle low. It was oversold yesterday near the close, so we might look to stick our toe in the water for bonds as it's kind of showing signs that we could see another upward move going forward. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye bye.